All right, welcome back. This is the Something Ventured podcast. I am Kent Lindstrom. I am your host. Somesh Dash is my guest today. How are you doing?
I'm doing great, Ken. Thanks for having me on.
It is so great to have you on. We'll talk more about why this is important in a second, but Somesh is a partner at IVP, and IVP is a real venture capital firm. Now, all the venture capital firms we have on, of course, are real, but this is a firm that has been around for decades. It has been at the center of Silicon Valley. It has billions of dollars under management. Somesh himself has invested in very significant world-changing companies, Amplitude and Dropbox among them. And the reason I mentioned sort of the depth and length of IVP's tenure, and you've been there for a while, like you didn't just start the firm or just join it, is that you've had a very stable and very central view in Silicon Valley for a while, which allows you to kind of observe trends from a relatively stable platform and maybe have some insight as a result of that. But how are you doing? It's been a kind of first of all, crazy time in America. This is now a post-COVID podcast.
Yeah.
And it's been a crazy time in Silicon Valley. And now, this has just been on my mind, so I'll bring it up. We've had these kind of crazy racial things happening just in the past week. As I begin to record, protests are starting around the country. How do you think this one's hitting, sitting in the Silicon Valley?
Yeah. Well, first of all, Kent, thanks for having me. I hope you and the family are all doing well in the midst of COVID-19. I know when we were talking a few months ago, it was all just ambiguous about how the shutdown will go. We've been sheltering in place since March, and just due to luck and grace, we've been healthy, and everyone's doing well in our family, extended family. I know a lot of people have been going through some difficulty health and economically in the Bay Area and across the country. So, our hearts go out to all of them. I'm glad you actually started with what's really top of mind. It's not, competing for a Series C against another venture fund.
Right.
I think we've seen a very tumultuous 72 hours here in America. I think, to start with, you and I talk a lot about media and the evolution of media. IVP was fortunate to co-lead the Series B of Twitter in February of 2009, which was almost exactly where that crisis was when compared to this crisis. It was sort of the beginning of the crisis. President Obama just assumed office. TARP was sort of being legislated at that point. And along came this young company that had this idea to revolutionize really communication, journalism, and broadcasting. And it was at that time we invested 20 employees. They had gotten to about 10 million uniques. They had 4 outages. And, we were just so impressed with the ambition of that amazing founding team that we knew we had to get involved, and we're able to luckily co-invest with our friends at Benchmark Capital.
Yeah.
We have been huge fans of what Twitter has done. And so the moment we saw 48 hours ago, where I thought I would never see this moment in my lifetime, a sitting U.S. president say, we should basically use 230 to shut down something that's really a public utility in a lot of ways, a public information source, because they provided users with a choice to fact check a sitting leader. What was really interesting, I don't know if you caught this, Kent, was a sequence. So, there was sort of the back and forth with Twitter and Jack. There was, of course, Zuckerberg's comments that were sort of pretty anti-Twitter and pro-Trump, which I thought was unusual, to say the least. And then what did the president do? The president, less than 24 hours ago, utilized language that was so overtly racist and violence-inducing in a way that I can't imagine the founding fathers of this country would be able to not turn their stomachs over in their graves. I mean, it is so against the core tenets of our democracy and the Constitution that I was appalled. I was shocked. And then, of course, amidst this background on Twitter, I'm looking at video imagery of what's happening in Minneapolis, but now across the country in terms of riots and race relations deteriorating in real time by the moment.
Right.
And I think, a couple thoughts, and I'd love to get your perspective. George Floyd, really, it's tragic to think about that individual life that was taken for no good reason.
Right.
But it follows in this tradition we've seen over the last 5 to 10 years of, Ahmed Arbery, Trayvon Martin, Eric Garner. I mean, people who really, because of one attribute that they didn't have control over, it's not their speech, it's not their actions, it's the color of their skin.
Right.
It cost them their lives. And it's very easy for us in this day and age to stratify ourselves and say, well, that's the fault of the police officer in Minneapolis, and that was a bad actor. But the fact that this recidivism keeps occurring over and over again means that we need to ask ourselves, even in Silicon Valley, question, are we doing enough? Are we doing enough to stop this at our individual and collective capacity? And I think, we talk a lot here about diversity and inclusion, and a lot of the progress that's been made, and it was long overdue, is around gender.
Yep.
I'm so proud of the work that Ailene and the group has done in All Raise and a number of other great nonprofits that we support. But I hope that we can expand the canvas of that conversation, include racial equality, to include socioeconomic differences, sexual orientation, ageism, so many issues that occur in our society. And, my question to you is, what do you think happens post-COVID? Do we continue in a mode of isolation, or do we assimilate with an orientation, trying to actually have a conversation about this?
I don't know. It's interesting. I had Charles Hudson on the podcast talking about, and it's always tricky too. And he was so generous because he's a black guy who's a venture capitalist. And you kind of think, well, that's interesting. I want to hear about that. On the other hand, you think, is he just tired of talking about that? Like that's not the only thing about him. And he was generous enough to say that he definitely does want to talk about it. But one of the things he pointed out is that he said in Silicon Valley, a lot of people may not actually, so this is a delicate contrast, but like with women, he's like, most venture capitalists know a lot of women, are probably even married to a woman. So have that relationship with women. He's like, a lot of venture capitalists don't know a black guy. Or have one that they knew in college and now he's off at Goldman Sachs or something like that. So the actual reality of it, while people speak to it like, oh, I'm very open to this and open to that, I think his point was, well, you're not actually doing anything on a day-to-day basis because there aren't a bunch of black people in your world. If you're in Silicon Valley, if you're in, Hillsborough or wherever you are, not because you don't want them or whatever, it's just, that's how it is in Hillsborough or wherever we are. Sure. So we're kind of in this interesting place where a lot of us just interact with a very certain group, a very certain socioeconomic group every day. And theoretically we're, just in our world, you don't think, of course, someone just kills a black guy for forging a check, or, women don't yell at people like, happened in whatever was Central Park. It's kind of more abstracted. You're not seeing it every day.
Right.
Where, when I started my career, it was in commercial banking. I was in Chicago, and you'd get on the L train to go to work, and like your view of the world was that like half the world was black in Chicago. It just seemed like and the executives were black, and the janitors were black, and the models, like it was sort of, you kind of felt like it was half the world, and it was just more there. And I just wonder if it's, until it comes into our living rooms or our computers through these images, if it's something that's just not as much on our minds as perhaps it should be.
Well, so Charles has been a longtime friend of mine, and I actually completely agree with him, which is, it's no longer just the role of someone to stand up for a community because of their gender, sexual orientation, their race, and say, my cause is X because I am X. It is actually the calling for people like you and me to look for, we're all the other in some way or another. Kent, you were from the Midwest and you went to Northwestern, so right. You're not a Silicon Valley insider.
That's right.
You didn't study engineering. I'm South Asian, I'm brown. And so I didn't grow up, being Caucasian. And so these are, all of us have in some variables we assimilate, in some variables we're different. And I think my realization after becoming a parent is, it's easy to say I have a cause that I stand up for because it's important to me. But what will it take to catalyze us to take up someone else's cause because it's important to them? And I want to connect this to COVID. If you think about it, many of us are maybe in subsectors of the population where we're less at risk. We're not elderly, we're healthy, we may not have pre-existing health conditions. We've done a lot of things in our area to create a more sanitary environment. And yet, why is it that the right thing to do still is to wear a mask and go out in public? It's because the fate of someone we don't know should be important to us as a member of this civic society. And so in the same construct, if we can, I did grow up with a number of African-American friends. Some of my closest friends in the world are African American, Chinese American, and both are going through, for very different reasons, a tough time right now in the United States. And
Yeah.
it's not enough for me to just lend an ear. It's more important for me to actually do the work around it. One of the organizations I've been spending a little time getting to know is the NAACP. And if you look at their homepage today, they have a campaign called "We Are Done Dying," and it's all about these 4 policy tenets that they're focused on: criminal justice, economic, health, and voting. Nowhere does it say you have to be an African American to support this. And it's on people like you and me who believe that this is important for our integration in society to be able to promote it through our social media platforms and other things, to contribute if we have the ability to. I do think that in 2016, when the presidential election happened, I, for one, thought that my realization was, to your point, Ken, I've been in a siloed environment. I follow certain people on Twitter. I listen to certain podcasts. A lot of the people I'm around have a certain political view based on geography, socioeconomics, all these things.
Right.
And I did make it a point to read the other side of the spectrum and learn more about their perspectives, and I continued that. We are 6 months away from the next presidential election.
Yeah.
I don't know if you agree with this, but I don't feel like the average American has diversified their thought process or thought more about the other side and spent more time on that. I think people have actually gotten even deeper into their existing cocoons, which leads to some interesting thoughts about what happens, in 2021 and beyond. I foresee that I'm actually really bullish that your platform, as well as things like Clubhouse and Discord and social platforms, we've learned now that maybe, it's not about taking a friend in real life and being their friend on Facebook. Maybe it's about meeting new people through these virtual platforms that are being created, the new ones, and actually using that as a pseudo entertainment, pseudo education experience, where you actually get to, maybe I live in Hillsborough and I don't have, as many, Brazilian Americans near me, but I do have the ability, if I have the resources near me, to actually connect with a lot of those people virtually and learn about their cultures. And I hope that is where those platforms will lead us. And all it takes, as is 1 or 2 dominant voices in the entrepreneur community, and we can get there.
Yeah, it's interesting. I think you kind of went from, before it was Donald Trump was a Republican, there were people like, George Bush, horrible guy, terrible idiot, all those kind of things. But I'll talk about me. I didn't actually think of a George Bush supporter as being like a bad person. I was like, we disagree on the policies, but I was like, they're just relatively conservative, just kind of different point of view. With Donald Trump, I think you get this thing where you look at things he does, like the things you described today, and they're so horrible that you view the Donald Trump supporter, you can't conceive of what their point of view is. Or I could conceive what point of, George Bush's point of view. We need a stronger military and lower tax, you can get it. There's something about Donald Trump where you just can't imagine the other person, to the point where you just kind of tune out having a conversation with the Donald Trump supporter.
Yeah, I agree with that in part, but back to our earlier point, part of that is because you and I predominantly live in an area where that is what shapes most of our collective thinking here, irrespective of race. I do realize, as I've traveled the country, obviously not recently, but in the last few years,
Right.
You will see how much he resonates with a different part of the country and their population, and gives them hope in a very different, from my perspective, darker way. I would say this to you. When I was in my 20s, I think a lot of my identification politically was around the fact that I was young, single, working, and it was very much more the fiscal association,
Yeah.
I think what changed for me is watching my parents age and having kids of my own. I think that role of being dad and son matter a lot more to me now than they did 15, 20 years ago. And so as the son of immigrants and the parent of school-age children, immigration policy and gun control really mattered to me in a more emotional way than just a pure fiscal policy would. So
Right.
My prioritization of the variables changes as my own life journey changes. And I think it's probably the same for you.
Yep.
And so for me, I look at this next election as perhaps the most important of my lifetime, and certainly among the most important in American history. And my only hope is that everybody goes out to vote and makes their voices known. And I do hope that, for all of us that have young children, we do find a way in the midst of all this to make progress on gun control, to make progress. I don't know if you saw the stats, but gun sales are through the roof right now because
absolutely.
of COVID-19.
Yeah.
Walmart stock's at a 52-week high. I mean, we're seeing some of the largest distributors and vendors, no fault of their own, seeing those sales go up. So it leads to interesting trends. Actually, in one of the things we're seeing at IVP is lots of hacks and lots of physical security challenges, and great companies in cybersecurity like CrowdStrike in our portfolio. But also on the physical security side, we're seeing kind of a new renaissance of companies that are combining the old ADT world with a lot of new age software encryption and technology. So that's another theme we're seeing.
That's really interesting. One thing I've been doing lately is I've been trying to watch Fox News, because I'm like, what can possibly be going on over there? And it's really interesting, because what you see on most people who experience Fox News experience it through like Stephen Colbert. So they get the really outrageous stuff. And when you watch it, you realize that what they're doing is, first of all, half the news is just news. It's just like there was a fire at the warehouse and 3 people were rescued. And then they have these things that, like, they sound really reasonable. Like they'll say the Michigan governor said that you shouldn't go to your vacation home, but here's a video of her husband up at their vacation home pulling out his boat. So the same things we do with Donald Trump, like he said this and then he said that, and gotcha. Sure. And then the outrageous thing. Right. But 9 out of 10 things aren't the outrageous thing. And then the outrageous thing just kind of blends in there. So it's much more masterful and insidious, if you will, than you might just imagine. It's not just a bunch of people being fools and a bunch of fools listening to them.
I, like you, have watched it more in the last 3 years than probably the previous 15 to 20 years. I would say this, a lot of their programming actually is just really well done. It's captivating. It's well reported. A lot of it, like you said, does actually resonate in ways that are more factual. Some of it, of course, is partisan, as is CNN on the other side and others. I think the interesting backdrop, though, is you remember probably the days where after Al Gore last election, Current TV got launched. And there's always been a place in our politics for new media outlets that are sort of promoting, a partisan view of things. I think what ended up being really interesting, though, is the amplification of cable news came from social media. So if you look at what happened, it was actually that the viewership numbers are strong for most of the big networks now because of all that's going on. But they actually don't even tell the full story. The full story is, most people who don't tune into Fox News catch, as you just said, 2 to 3 clips a day just that are retweeted or enhanced on Facebook. And that becomes their reality because they don't see the context around it. It's also why, if you think about journalism ethics, and the way journalism was managed, historically, there's a reason that, the New York Times, the Wall Street Journal, all these things were run through trusts, because there had to be some sort of an oversight committee to be able to make sure things weren't taken out of context. So we ended up in a situation where people are saying, burn this down, or you end up with a Bradbury like Fahrenheit 451 situation. I think that's the interesting analogy. Is I was curious when Facebook proactively announced they're going to create sort of not just a committee for them, but a committee for everybody else, with an interesting mix of technocrats who look like they're more from a Davos happy hour than sort of what you would view as a regulatory oversight board. And I'm just, I do think that there's dangerous ramifications that come from social media when things get over amplified, and there isn't. I applaud Jack and the team for what they did this week. It's really a big step in journalism. The thing that we'll have to wait and see, though, is that right now we just don't know. We have a lot of polls, and we know from 2016 that polls they can be correlated, but there's certainly no causation about how people are leaning politically. What'll be interesting is first voter turnout. My parents are from India, and what's amazing is that democracy, typically you see 700 to 800 million people vote in the national elections every 5 years. Our numbers are pathetically small in this country in comparison. I'm hopeful that people do vote more this time, given just what's at stake, irrespective of the outcome. And the other thing is just the thing, you and I have talked about this before, but policy is as important as politics. And so my hope is that, I did policy debate growing up. I'm a huge policy wonk. That the essence of legislation also gets discussed as part of the next 6 months. My fear, though, is that we've moved to a world where it's going to be the headlines and the 30-second clips. And then, unfortunately, the substance on these key issues that are going to determine public policy for the next 4 years are probably going to be swept behind the rug. We saw that happen with Hillary Clinton in 2016. It's probably going to get exacerbated given the situation now.
Yeah, I think that's right. I think there's probably a big market, but I don't know how you ever sell this, but a big market for a government that's just super competently and quietly run. Like somebody who said, look, I'm going to go and I'm I'm going to do all these kind of things. I'm going to have a deal with South America, and you're not even going to know why, but I'm going to do it, and you'll hear from me every 2 weeks.
Mm-hmm.
Like that would just be lovely. But it just seems that you got to have some crazy plan on each side, and it'll be an interesting election. My biggest fear is that it's a close election.
Yes,
I would actually prefer a non-close election, no matter what happens.
Kind
of for the sake of the Constitution.
I agree with that. I agree with that completely.
So now we find Silicon Valley in this time of COVID, but we've seen a few chapters in Silicon Valley, and I want to kind of put it in the context of those chapters of it's all over or it's all just beginning. I mean, this all really kind of started with the pre-.com era, right? Like in the 90s,
yes,
we kind of saw the flicker of this, right? There were a few small IPOs. It was probably what a Series C we would call today. Like, how do you reflect on that compared, as we've...
Yeah, it's interesting because, some fun history. IVP 1 was raised in 1980, and I believe it was $22 million. $22 million today, as you know, is like about what we invest in a Series B.
That's right.
Deal. That was the entire fund, which we took 4 years to invest from 80 to 84. One of our first investments was Seagate. And just to give you some statistics, when Seagate went public, I mean, it was basically the equivalent of what would have been a Series C today.
Yeah.
And also what was different was at that time, most of the large Wall Street banks didn't have underwriting businesses that wanted to do tech IPOs. So what was there was the four horsemen, if you remember. It was sort of, the small boutiques that were homegrown, the Hambricks, of the world,
yes.
and, the Montgomery Securities and the Robertson Stevens. And they were the ones who were taking these IPOs public and the lead equivalents, because Goldman Sachs and Morgan Stanley and Merrill Lynch wouldn't do those because they were too small. That, of course, changed as success came in. And in the late 80s is when you saw the Microsoft IPO, the Oracle IPO, and you saw some of the bigger ticket ones come. By the way, by bigger ticket, these are a small fraction of what like a Series E would be today.
Well, and so, aren't there two things? And because Microsoft went public, it was like something like a $500 million market cap, if I'm getting that, something like that.
Right. That's right.
And then hundreds of billions of dollars of value were created in the public markets.
Exactly.
Now you see, and I don't know if this is good or bad for the world, things like Uber, where billions of dollars of value are created, but not after the IPO. The bulk of the value is created before the public has a chance to participate in it.
I think that's been kind of the trend of the last 10 years is companies, it started from my perspective when Sarbanes-Oxley came in the early 2000s, because then the cost of going public and the time required to go public, it became a reaction to what was the excess premature IPOs in the late 90s, where if you remember the .com days, companies were going public that had no profit, very little revenue, and business models were totally suspect.
Right.
That's the big difference today is an IPO that goes out is a really solid company. Even the quote unquote worst ones are much more solid than probably the best ones were a long time ago. I think what's been interesting though is Sarbanes-Oxley in some sense led to a lot of companies staying private longer. But the other piece of that was a group of firms like ours who decided, T. Rowe Price, Fidelity, and Wellington were traditionally the ones who caught that wave for Microsoft between 500 million market cap and call it 100 billion.
Right.
If you think about it, though, IPOs are just financings. They're big milestones. And Silicon Valley had this truism that an IPO is the end date of the venture journey, right? When in reality, an IPO was simply a milestone on that way. It provided in those days the first time for executives to get liquidity. It gave you a liquid public stock to make acquisitions on. Give you different stakeholders and public investors. But the fundamental business tenets, going after a big market, continue to invest in product development, hiring great executives, competing against, both startups and incumbents, that was the same pre or post IPO. And so, when venture capitalists realize, wait a minute, it's the same company and we should be the ones catching some more of that growth curve. We've talked about this for about a decade. The IPO window shifted, and what emerged to fill that gap was a group of kind of crossover funds or late stage funds that were saying there's a group of early stage investors that do Series A through Series A and B. We really will fill that gap between that and the IPO. And as time went on, those were some of the most successful rounds. If you look at Facebook as a good example, there was a good recollection by Dan Rose this week about DST's involvement. And most people don't realize is Yuri Milner took a lot of risk, got involved at that what seemed like a crazy price, $8 billion.
Right.
But it turned into frankly, a better investment, even at that valuation, than almost every Series A investment. If you
Yeah.
think about both the multiple, but of course the dollars returned. And so um, I think that opened up everyone's eyes to the fact that there's a late stage market. My prediction is we're probably going to see, though, in the next decade, an interesting middle ground, because I do think with some of those IPOs you just mentioned, there is a cost to staying public too long, right? Sorry, staying
Right.
private too long,
Right.
where at some point what happens is the expectations just keep going to a sky high level. Companies have difficulty crossing over from hyper growth to operating leverage and then eventually profitability.
Right.
And frankly, there's a muscle memory you need when you're communicating with the street, which is how do you provide guidance? How do you set the course on KPIs? How do you pitch actually to new long only hedge funds? And that's very different than raising a venture round once every 2 to 3 years, where
Right.
people generally believe in the thesis and then kind of leave you alone.
Right.
So I think that'll be the interesting thing is we're seeing in our firm a lot more companies saying there's actually an in-between thing where maybe you don't want to wait 11, 12, 13 years to go
Right.
public. You definitely don't want to go public in 3 years. Evan Spiegel, who we work closely with at Snap, I think actually did a good job of getting public when he did. It was early and it was tough the first year. But if you look at how Snap has done and how they've executed as a public company, $25 billion market cap, approaching north of $2 billion of run rate revenue, built out the programming inventory. I mean, you really see so much of that progress happen in the public markets,
Yeah.
and now they are going into a recession, and they have, obviously, we have no insight. We're pure public investors now.
Sure.
They have the resources of not just the cash balance, but also a public stock, which gives you the ability to make some Instagram-like acquisitions that could be the next phase of growth for that company.
Yeah. Well, now, so in hindsight, what do you see? There was the dot-com boom, 95, 2000, the bust, 2000, 2005, roughly. And at the time, it kind of became a joke, the dot-com boom. But really, the dot-com boom was saying, this is a really exciting transformational technology, which it ended up actually being in the distant future. But in that period, it just became kind of a joke. And I remember in 2002, 2003, people were saying, well, everything that's ever been invented for the internet has been invented. And that's whatever it was, Yahoo. And that was not a weird thing to say. That was like a very smart, venture capital like thing to say. But in retrospect, they were right. It was just a little too early or not quite there.
Yeah, it relates to our earlier conversation. Part of it is in Silicon Valley in particular, we tend to live in extremes. So either something is a gold rush or it's over. It's hard for people to have the time frame. And so one of the key tenets of, I think, being a successful venture franchise is you make your investments. I mean, you guys are seeing this in your own world over kind of 2 to 3 years. But then you actually harvest that in those investments for the next 4 to 5, and then you manage liquidity in years 8 to 10. So you live through multiple cycles, even in the course of a single portfolio of 20 to 30 companies. And I think, I remember one of the seminal moments for me was being a college student at UC Berkeley, and I had a chance I didn't know much about venture capital. I listened to a talk by John Doerr. I didn't even know John Doerr was. I was 19 years old. And I was riveted. I was so just fascinated with what venture capital could do to the entrepreneurial ecosystem. I remember he said 2 quotes, one of which I thought was a little crazy at the time. The other one has really stuck with me. The first one was, the internet is the largest legal creation of wealth in human history, or something like that.
Yeah.
And I remember thinking, the fact that he's saying it that way makes me wonder if there's illegal activity going on. Right?
Right.
So, and then the other one was, all great trends are overestimated in the short term and underestimated in the long term. That one really stuck with me because everything he predicted, I remember that talk was right. He had just done the Google Series A. He was talking about the internet. He was talking about telecom infrastructure and bandwidth. And, if you look at the stock market performance from 2000 to 2005, the conclusion most investors drew were, optical networking overblown, .com, internet gone. Many venture franchises, by the way, stopped doing a single consumer deal in that period.
Yep, that's right.
Completely. And I remember when you and I met around that time, it was hard to find people that were willing to take a bet on consumer. Even IVP, which had a storied history in the 90s of being Series A investors in things like Netflix and Ask Jeeves and Excite and TiVo. There was a period where we had kind of stopped, and I joined the firm in 2005, right when we were restarting, in some sense, the consumer focus. But what was really interesting is, I think history has a way of explaining a lot of this, which is, when I met Facebook for the first time, they had 7 employees. And I remember the stat that Sean Parker said. He said, the key driver of this business is the fact that there's 50% plus broadband penetration in the United States. So quietly, before anybody had realized it, the country had actually modernized its broadband infrastructure. And so finally, a tool like Facebook could succeed where Friendster struggled, because you had that broadband infrastructure actually in place at the right place at the right time. I do think that there are so many trends that we totally underestimate. We underestimated, for example, gaming. I remember IVP invested in a few gaming companies when I started in 2005. And at that time, it was pre-smartphone. So we just thought, oh, the carriers have all the distribution leverage. You have to pay for placement. It's like basically like a Walmart model. It's not a great place to be a startup. And then we passed on a few investments. Luckily, we caught up and did Supercell, and we did Zynga and Njimoco, all in the period of about 3 years. And it was the smartphone that opened up that opportunity. I mean, I was thinking, if we had this crisis, COVID-19, when the last recession happened, I mean, we'd still have fax numbers on business cards. We'd have dot matrix printers.
Right.
We'd basically have an inability to use tools like Zoom, right. To communicate and do these kinds of things with podcasting. So I think we've made huge leaps and bounds. I'm actually even more bullish of the next 10 years, because the quality of innovation we're seeing at IVP right now is just unbelievable. People are utilizing technologies within machine learning, artificial intelligence. Even if you go into the health sciences, telemedicine is this tailwind, which is now creating such innovation in genomics and bioinformatics that we actually think you're not only going to see great enterprise companies that get created, but we could see a period where the next Genentechs and Amgens get created in some sense, $100 billion plus pharmaceutical biotech companies. But the other thing we're seeing is the last decade was a lot of Silicon Valley startups disrupting old line technology companies. So you saw the share shift from, frankly, the Hewlett Packards and the Dells and the EMCs of the world, the Novells. That'll continue. You'll see the database businesses of IBM and Oracle and Microsoft, I think, be challenged by new entrants that have cloud native architectures. But what's really interesting is we're seeing the Raytheons and the Northrop Grummons and defense, or the Caterpillars and industrials and the Monsantos. Those companies are sort of being rethought now by entrepreneurs as Silicon Valley-based digital versions of those companies. And that's what I think is fascinating, is actually the real opportunity is the new way to industrialize or digitally revolutionize the Fortune 5000. And that's where I see a lot of it. It's going to be less of, frankly, trying to disrupt Facebook or trying to disrupt Google, which is a lot of what we saw the last decade.
Yeah. I mean, what do you make of what's happened over the past? So VCs, I make fun of venture capitalists on this podcast, because I realized you can totally do it, because none of them thinks you're talking about them. So as long as you don't mention a name, they're like, yeah, the other guys are full. So the VCs, being a little facetious here, as this crisis unfolded, first, they absolutely panicked, it seemed like. I mean, they seemed like they were the most... I mean, the guy who runs my corner bodega, put up a shield and got out some, Windex or whatever. And the VCs just seemed like they retreated to their second homes and are putting Amazon packages in the garage for 3 days. And then there was this phase of just super doom, literature, like it's over, venture's over, no one's investing for 5 years. And then the stock market didn't collapse. In fact, it kind of said, well, I don't know what it said, but it kind of said, there's a lot of destruction going on here, but a lot of acceleration. Like JCPenney probably should be shut down, and Facebook probably is more valuable, and Zoom is valuable. And then now we're on the beginning of something, it feels like. But what's your sense of what we've gone through, or venture capitalists have kind of gone through in the past 2 months?
So I heard a good quote that a lot of the way your thinking is shaped is based on the decade you were born in and the sequence you are within your siblings, right? And so I think both are related, which is, I think if you worked in institutional money management in tech and venture and had been through the last 2 cycles, which by the way, was the 2002 dot-com bust and the 2008 financial correction, the recession, the Great Recession, those were different days for venture capitalists. I mean, there were clawback provisions, there were fundraising issues, there were company shutdowns, there were IPOs that got canceled last minute. And so there's a little bit of PTSD. So I know that in talking to folks who had worked through those eras, there's sort of a fight or flight mentality, because a lot of them had to live through that and work through that. It wasn't theoretical for them, it was real. Right. And a lot of them have scar tissue from that. And this ignited some of that muscle memory, which is, if this is going to be as bad as we think it is, we need to cut deep. We need to act fast. We need to be super conservative. The other issue, Kent, is this was a health crisis. The other two were really economic
That's
crises.
right, yeah.
But because this touched families and health in a way that the other two didn't, I think it's totally reasonable for people to really want to take precaution. And what may seem in hindsight as a little bit too much, but given the times and the headlines, I think a lot of them did that. The other end of the spectrum was, for a lot of people, this was their first crisis. And so I saw a lot of the opposite, which is, this is great. A deal that was only at like 60 times ARR is at 55 times.
Right.
So I got to put all my chips in that basket.
Yeah.
And so there was a lot of people who felt this was going to be a 1 month, lull, and then everything's better than even before. Now, I can't understand for the life of me, the behavior of the stock market ever, but particularly in a period like this, because, if you think about it, we, in March through April, those first 6 weeks of COVID-19, we did see even the best enterprise companies trade down between 5 and 50% with a real fear of the economics that are happening. Right. What's interesting, though, is that, if you look at right now, at the end of May, we're ending the month, the Dow and S&P are both up 3% this week. NASDAQ's up 1.3%. Most of the traders, we talked to a lot of them, they're betting that the economy is going to successfully reopen. We're seeing some signs of that. We're seeing some positive news come out of the economy. But just to give you the backdrop, we always there's kind of linear equations and systems equations. A lot of things are interrelated that, frankly, people in the markets don't want to associate with each other. So the NASDAQ's up 6.2%. With the backdrop of the US and China about to potentially enter one of the worst trade wars that we've ever seen in an election year. So our supply chain is so reliant, and of course our currency is so reliant on China, that how those two things aren't being factored into markets is just confounding me, because if we do see, a race on tariffs, if we do see the critical macroeconomic variables change overnight because of policy, we will absolutely see effects in Silicon Valley. We are not immune from those. Right. But I do think the reason I think that, there's the old thing you and I were talking last time, which is it a V-shaped, is a U-shaped? And there's this new one I heard, W-shaped, which is sort of volatility, which is a back and forth for the next 5 years. Volatility is up 103% year to date, the VIX index. Yep. And I think the jobs data is pretty scary. Next week, we're going to have the May jobs report. And they're predicting unemployment to be around 20%. The peak during the Great Depression was 25%. Yeah. So we're, in my opinion, we have, if you look out 6 months, there's just going to be a lot of unknowns still, where we don't know the pace at which we can recover. One of the interesting things I was reading is the Census Bureau had this survey, and most businesses post-stimulus that got the money and kept it, unlike most Silicon Valley venture funded startups who didn't keep it. They only have 6 months of cash post-stimulus. And most of the business owners also think it'll take 4 to 6 months to get back to what they were before. Right. So what happens after? Are we going to become a socialist-like country where we just we were talking politics, like we have a Republican president and obviously a Republican Senate, and we put a third of the GDP at record time, into a stimulus package? That is, right. When I was growing up, that was the inverse of being fiscally conservative. Exactly. In some ways, and what the Republican Party stood for. Yeah. I think it'll be interesting because credit will dry up, liquidity will dry up for a lot of these small businesses. Many of them are in industries that are going to face disruption broadly over outsourcing and sort of the internet and mobility. And so some will modernize, but many will face more systematic issues. So I think short term, people are very optimistic that we'll get a lot of people back to work. I certainly hope so. Longer term, though, if you look at Germany, unless you have a fundamental rethinking of the education, vocational, and re-education systems, they've done an amazing job of taking auto workers and actually recreating, in some sense, skills that make them more modern knowledge workers. Right. And we haven't done that in the United States. We don't have federal funded programs that really encourage people to be able to have those new skills. And so I see this disruption lasting longer. I do think that, you kind of hinted at this. There was a lot of chaos the first 4 to 6 weeks around how can I do an investment if I'm not meeting the entrepreneur for a coffee, or if I'm not meeting them for a meal. I can just speak from our own perspective. It was very difficult for us to talk about that, but we just made our first investment in a company that we have not met the founder. We've met him we've probably spent about 10 hours with him virtually. And I feel like I could tell you literally how his house looks like, but I can't tell you what the inside of his office looks like. And we met his whole team. But that is happening. The venture industry stayed very active, resilient. A lot of deals got done. Big growth rounds happened. And part of that is because there's always a lag. There's always a lag between public and private. And this time, the public still haven't corrected, much less the privates. I don't know if you caught, but I thought it was interesting when Salesforce actually announced this week. They actually saw that they withdrew the revenue targets for the next 5 years. They guided below for Q2. Right. I think the Q1 earnings for SaaS companies were so good. If you kind of look at Twilio and you look at Fastly and all these companies, the ones that ended in March didn't really face the brunt of COVID. The ones that ended in April felt a little more. You saw what happened to Workday. You saw what happened to Salesforce. Yeah. And then what'll be really interesting is Q2, because I think Q2 is where you'll see the full impact of this, both in the Fortune 500 and also in our SaaS infrastructure names that are trading the highest. And that's going to be the time where I think the markets will probably process the fact that this was probably deeper even in the tech industry than we may have thought. Long term, I'm very bullish that some of the best companies are going to be built and created in this time, but we're going to see volatility, and you have to take a long-term outlook if you're going to play equities versus a trading outlook of going in and out of stocks.
Right. What do you make of it feels like VCs are making some decisions, companies are making decisions for the next 10 years based on basically 2 months worth of data. So this has been going on for 2 months after 10-year bull market. And people are like, well, everyone's going to be working from home now. Big cities are over. Like these, we're going to downsize our real estate. Twitter, you can work from home forever. These seem like pretty long-term conclusions from a very traumatic, but nonetheless, 8 weeks.
So yeah, I agree. I think the first thing that we've been telling our entrepreneurs is just whatever your original plan was or your forecast, throw it out the window. Throw it out the window. I may have a 5-year-old make a cameo here.
That's how it goes.
It's back.
Say hi.
Hey there.
Patsy is back.
Okay, cool. I'm gonna come catch you in a bit. Okay. And so we the first thing is we said whatever the forecast is, throw it out the window, because it's whatever is PC, or BC pre. We joke that BC is before COVID, right, or pre-COVID.
Right.
Doesn't matter anymore. So, and then a lot of companies worked on 3-year models. If we can't predict, what's going to happen in, June, how are we going to predict what happens in 2022? So what we're trying to do is help our companies realize that have a rolling 30, 60, 90-day forecast, but it's a little bit like you got to live a little hand to mouth right now. You can't be sort of planning for, 2 winter seasons from now. What we do think is that there was a lot of excess, as you and I have talked about, which had built up over the last decade, where money was flowing freely, rates were low, companies were spending a lot, super voting led to founders being able to essentially spend most of the venture on 2 things: salaries and rent, right? Yeah. And if you think a little bit about what's happened already in just the last 60 days of COVID-19, this rent piece of it will, I think, correct dramatically, where I don't believe that we're going to go to a world in which there's no offices for any company.
Right.
But I think the simple supply-demand economics of does, a venture fund need to have 20,000 square feet and assume everyone's going to be in there from 9 to 7 and have massive, dedicated offices? Absolutely not. I think most of the firms are going to downsize and have much more shared spaces and much more of a hybrid approach. I think commercial real estate agents had a wonderful racket going for a long time. I think that will end as a result of the fact that there's going to be less demand for the sheer amount of space and build out. I do think that if you're going to have a more distributed workforce, the stats are coming out that survey last week, I think 35% of San Franciscans are considering leaving, and moving because of cost of living, which is a whole bunch of implications.
Right.
If that's also the case, I do think that how we think about salaries and how we think about retention in terms of options and cash comp is going to change, And I think if people have the ability to go live in, Portland, Oregon versus Soma, it'll change how they think about their compensation expectations also. And I think that'll have a net benefit effect as well for both employees who can save more and companies who can also spend and conserve more for investment in R&D and have the global access. I was surprised to see some companies say we're going to be fully virtualized forever, because there are certain jobs, I can speak from our own firm, where you absolutely do need to be in the office for certain roles and certain
Right.
functions. Sometimes maybe not 100%, but certainly 80, 90%. There are other roles that make a lot of sense to be, remote and virtualized. And I think good managers are thinking about it strategically about how do you optimize business outcomes, and
Right.
then think about what makes sense to kind of fully keep, virtualized and remote versus in the office. But I think we're just going to be in this period of learning and uncertainty for the next few quarters. And I certainly know that I'm very bullish, though, that the venture community is adapting very quickly. I think the same people that had very extreme views, in week one are already adapting and modifying
Yeah.
their views in week 11 or 12 or whatever it is. And I do think that, I've just been so impressed with how resilient the entrepreneurs are. Because look, you and I both know the venture business, you can actually do a lot remotely, but imagine trying to hire your first engineer,
Right.
virtually without ever meeting them, or doing a socially distanced walk at the best. I mean, it is amazing how much entrepreneurs are putting into the line. Of my 15-year career, some of my best learning, some of my best conversations with founders have happened in the last 8 weeks. And it
Interesting. Yeah.
actually, it reinvigorated my belief in this ecosystem and my belief in Silicon Valley. And we were like the balloon that just got a little bit too big and needed a little prick where the air had to come out. No one expected it to come out through COVID-19. But once it has, I think a lot of net benefits are also accruing to the ecosystem.
Yeah. Let me ask you something about working from home, and then I'll wrap up with
Yeah.
positive. But yeah, the working from home thing, it feels like everyone has a bit of a myopic point of view, which is that, well, like I'm getting paid $250 in Silicon Valley. I'm going to move to Portland and get paid $250. It'll be great. I'll get a better house. It seems to me that that's not what big tech companies would do if they built work from home infrastructure. What they would do is say, well, you're in Portland, we're going to pay you $90K a year. It gets worse. That is if you beat the 50 million people in India who can now work from their homes and are willing to do this for $37,000 a year, you actually had this huge advantage because you could get to the office and you don't get to go make $250. I'm just making this up, but you don't get to make $250 in Portland. You now get to compete with everybody in India and China who now can work from, remotely. Like, are we thinking about this like in just kind of the rosiest way, or?
I think it's a really good point. I do think, and also the other thing you didn't add is what happens to state tax after this happens. Many states are going to run the most massive deficits they've seen in 50 years, and including the state of California. So, as people do the math, many of them are assuming, I'm going to move to a state with no state income tax. I wouldn't make any assumptions based on the past for what the future will hold in terms of what tax rates will be or whether there'll be one or not. I absolutely agree with you that I think the broader trend that is both an advantage but a dangerous one is that there will be more globalization of some of the labor pool that existed here in this small 40-mile radius of the Bay Area. And it already was happening. And most of our companies, even before COVID-19, had development outfits in India, in South America, in Russia, and Eastern Europe, because there's such good engineering talent. Engineering once used to have a barrier that you had to have been, when my father came to study, computer science at University of Waterloo, it was one of the only universities that had the infrastructure to be able to actually do, COBOL programming, right? With those, you see them in the magazines, those things, it's about the size of my home office was basically like what today's like iPhones have computing power to do. And I think that was that era. And that's why a lot of people that had those skill sets came out of certain universities and certain training. Today, my 8-year-old is going to be doing programming camping virtually this summer, right? And learning a lot of that stuff. So I think that is a good trend because it enables more global flow of labor talent. I think the challenging thing, though, is how can Silicon Valley continue to develop our own skills and level up? Because in some sense, if you view yourself as purely a functional worker and say, this is my skill and I plan to apply that over a 40-year career, technology is such a disruptive force that there's always going to be new technologies, new markets, outdated business models that we need to have constant learning. I go back to this idea of just, if you and I could go back and, not only at Northwestern or Berkeley and say, hey, we look at it from an LTV CAC perspective, can we pay kind of a annual subscription and be able to learn some of these new skills and actually learn how to actually think strategically about business broadly as leaders? I do think that is the way that we're going to have to adapt here in Silicon Valley. There is a big benefit in the earliest days of a company of having founders near each other. And I don't think you can say, I'm going to have a co-founder in Rio, another co-founder in Taipei, and then we're going to just build this amazing company, because so much is not just the communication, it's the trust, it's the problem solving, it's the way you can do stuff. You can certainly do some of that online, but so much of it comes from kind of the sheer amount of physical time you spend with someone in an area.
Yeah.
That's why good venture partnerships last, because people spend a lot of time with each other and communicate with each other. I do think that people are probably underestimating this economic impact as it goes on, where California, in some sense, we have the knowledge workers who are going to continue being in high demand and continue producing. Tech will be fine as an industry, but I mean, you look at Napa Valley, you look at Hollywood, you look at the ports. I mean, the economic data in California is just staggering right now. Tom Steyer is, of course, leading the task force right now to try to figure that out. But I think the question is just, can the tech industry also help keep California and Silicon Valley broadly, the geographic Silicon Valley, a resilient ecosystem, or will Bangalore and New York City and Rio de Janeiro become like rival kind of ecosystem? I don't actually think, by the way, it's zero sum. I think having rival ecosystems is a good thing for innovation. But it's going to be really interesting to see.
Yeah, it's a Chinese curse, right? I mean, we live in interesting times. So let's finish. We'll tell people how to get in touch with you. But what are you optimistic about, either on the political and social side of things, or the Silicon Valley side of things? Like what do you think is the good news?
I think the good news is, so in our portfolio, we have about 82 active companies. We've seen about 15 literally just accelerate because of COVID. Those that have telemedicine, wellness, mental health. I mean, one of the companies my most recent investment before COVID-19 hit is Lyra Health, run by David Ebersman.
Sure.
Their focus is on how do you provide coaching and therapy to any employee, starting with enterprises, which is their focus, in the same way that we have dental plans and vision plans. I mean, one easy litmus test is, as much as we love having the ability to get prescription lenses and contacts and braces, and I think COVID has showed us all how much anxiety-inducing stuff is happening around us, and the importance of being able to talk to a qualified therapist who's trained in EBT. They've done exceptionally well, accelerated their business. They're beat on the bottom line and the top line since we invested and since COVID. We're seeing that in their security companies, CrowdStrike, and of course, Datadog and Infrastructure had massively successful Q1 earnings calls with, really good traction there. We're seeing it in gaming. We're Masterclass, of course, announced recently, which I'm involved in. It's been an amazing company. My partner, Eric Liao, led it. People are loving this kind of mix of edutainment, education and entertainment. There's companies that, of course, got hurt by COVID-19 because stuff that touches hospitality, travel, retail are certainly, suffering for no fault of their own because of their business models. But the vast majority of the portfolio is using this as a way to increase the balance sheet, raise opportunistic financings, increase their credit lines from Silicon Valley Bank and others, decrease their fixed costs, manage AR and AP more efficiently. I'm really bullish, actually, on subscription business models. I was mentioning Masterclass, but I think the next, series of, massive internet consumer tools are going to look more like a Spotify or a Discord, which we're involved in, or Masterclass, and less like ad-driven models. I think the advertising world will go through its own challenges in the next few years if consumer spending decreases. I'm very bullish on education technology. I just think that all of our kids are now at home, and we're realizing that there's just such chaos in how to create a single pane of glass to be able to like run your kid's life virtually. And a special shout out to the amazing teachers and educators out there who are to me, as in many ways, as selfless as healthline workers. Those two groups have been amazing. We talked a bit about health tech. More broadly, one thing I've been thinking about is I think in a period of social unrest that we're going through, having religion and community and faith come back to the lives of American families is important. So
I think that's right.
I do think that our parents' generation went to church every Sunday. I think the next generation is changing, their relationship with a physical meeting place to pray or meet. But in times of crisis, frankly, the old line community centers and churches were the things that got families through those tough times. And I've been seeing some interesting business models about virtualizing that, and how do you create subscription services that give some faith-based stories and lessons, but do it in an interactive way, gaming for kids. I'm really fascinated with that.
Wow.
I do think that politically, having the ability to have people just get a general awareness of the key policy issues going on is going to be more and more important. But I also think the big one I've been thinking a lot about is my parents' age is senior care. I think we're realizing through this virus that the most vulnerable populations were those that were in nursing homes and those that don't have physical infrastructure. And I think there's a huge opportunity to build really massive, almost concierge health-like services, one medical-like service for senior care. I've met 2 entrepreneurs doing that. So there's no shortage of opportunity, Ken. And I'm really excited. But in some ways, it's been an amazing opportunity for me to reconnect with my own family because of the travel that I used to do. It was hard to do that. My own parents, as I see them going through both as immigrants, the wonderfully horrible public rhetoric, but also the health stuff going on. But with entrepreneurs, I mean, aren't we lucky to be in an area where, like, instead of lamenting their fate, the great entrepreneurs are just not looking backwards, but looking forwards. And that is the essence of this ecosystem. That's been there from the days of Frederick Terman and Hewlett and Packard. That'll be there long after you and I are gone from this earth.
That's great. That's a great bunch of positivity to end on there. How do people get in touch with you or find you or follow you, or what's your preferred?
Yeah, sure. My email is sdash@ivp.com. My Twitter handle is Somesh Dash, first name, last name together. One thing I'll just end on, I've been thinking a lot about this, but I feel I've met so many real life heroes within my family and within the startup ecosystem. I was reading last night this quote by Langston Hughes as I thought about our conversation. And he has this quote. He says, "Hold fast to dreams, for if dreams die, life is a broken winged bird that cannot fly." And I just thought that was a beautiful quote because in this tough time for so many people, that optimism that's so quintessentially American, in my opinion, and the reason my parents and others came to this country, that hope is still there, that those dreams are still there. It's our job, I think, as Silicon Valley technocrats and people who've done well to enable and catalyze those dreams to actually come true.
Wow. Well, thank you so much for doing this. This has been fantastic.
Thank you, my man.
All right. Thanks a lot. Somesh Dash has been my guest. This is the Something Ventured podcast. Talk to you next time.
Talk to you, man. Thanks.